everybody. Welcome the four views that I've had so far. I know only two of them are from myself, so welcome to this channel. uh, this week I've been really busy at work, so I haven't really done much with my Vanguard individual account. I still have this automatic investment setup that's going on, and since I didn't really buy much, I didn't really do much. I'm not gonna talk about my Vanguard individual account this time, but I'm gonna talk about something else. Hopefully that will be interesting, and for me that will also be a reminder. As you can see from the title, that it says "Forgotten Treasure Buried for 7 Years." So I'll talk a little bit more about that in detail, just in a few seconds. Also, I'm gonna talk about Vanguard fund that I've been investing through automatic investment. So that'll be part of today's journal as well. So what happened this week? Like I mentioned earlier, I increased the amount of my automatic investment. I did not buy any ETFs, and my M1 finance account is finally up and running. But it's been 2 days since my money got in there, so I don't really have that much experience with it yet, but I like it so far. And I'll probably talk about my experience with it in a few weeks, see how it goes. So next time I'm going to talk about the mutual funds I've been buying at Vanguard through automatic investment. I'm only buying two. One of them is the one that tracks S&P 500, and the other one is the Vanguard Store Fund. It has 60% of stocks and 40% in bonds, which is a good diversification for me because in my current portfolio is mostly stock index fund or ETF. So this one has 40%, which is a good diversification tool for me to get more diversified. Anyway, it has about 10 actively managed Vanguard funds, which covers a lot of different things, and that's why the expense ratio is also higher, about higher than the one that tracks S&P. But I think it's worth the extra expense just to get better exposure, a wider exposure from different things. So as you can see, it has some international exposure, it has growth fund, it has a value fund. Altogether, and it's all professionally managed. I'm assuming they do research and do all the rebalance. So all the things that we don't have time to do. Yeah, so we just set up this investment schedule, and then Vanguard will buy it for us on a regular basis, based on the schedule we tell them to. So that's very nice. And next, that'll be the title story of this week. Recently, I transferred my some of the stocks and ETFs from my TD Ameritrade account to Fidelity. At that time, I realized I bought some of those ETFs from 7 years ago and never really looked at them until now. And the reason I did that was TD Ameritrade used to have very high trading fee that was like $9.99 per trade, but ETFs were traded for free. So I bought quite a bit of them by setting up a very low target price and a limit order. So some of them actually went through. So I ended up with dozens of ETFs, just one or two shares of them, but then I never really followed up. I just placed that order, and then they were triggered, and then I never bought another one. So when I look at it, it actually is pretty good. Most of them grew by 20, 30, or even 40%. It's probably not that much considering it was 7 years ago, but when I think about it, if I kept buying from that time, then all the accumulation, all the compounding over the years would have been much better. Would have shown a much better result. You probably also noticed my Apple stock that has 470% of gain. The reason I had it a very long time ago, and I actually bought it for like over 300 per share, but there was a 1-to-7 split down the road. So when that happened, my 10 shares of Apple became 70 shares. And a few weeks ago, I bought another share after 7 or 8 years. I bought another share at 250, and now Apple is at another all-time high, over $300. So I wish I had bought more back then, just a few weeks ago. So the lesson here is basically, even though you don't really have much knowledge and much experience, you can still do some research and pick some ETF or mutual fund through all the information you can get online, and then once you pick them, you just buy them on a consistent, regular basis, and eventually it will pay off. Most of them will pay off. I think there are some of them that actually are not doing that well, but most of them are doing pretty well. And you also notice those something FSG, something FSMX, they're all Fidelity's mutual fund. Fidelity also has this nice feature of letting you do automatic investment. You just set up a schedule, and then it will regularly withdraw money from your bank and then buy these funds for you. So if you are busy, if you don't really, or you are really uncertain about things like myself, you can just forget about it and then let the Fidelity broker do it for you, so you don't have to carry that burden. And down the road, 10 or 20 or 30 years from now, most likely you will see a much better growth than doing it yourself, unless you're a professional, of course. So that's all I have for today, and this is my week 3. I hope by doing this, well, for myself, I do feel much more motivated, much more involved in my own investment journey. So I hope this will also help you a little bit. And if you do feel that way, please support me through subscribing to this channel, and also hit the like, and we'll probably be able to see more later. Thank you. Bye.